Welcome to the Ultimate Trading Podcast for beginner traders. I'm your host, Isabel Maria, and today we're diving into a crucial topic for anyone serious about trading: setting realistic goals and avoiding the trap of overblown expectations. This is tip number 34 from our Trading Psychology series, and trust me, it's one of the most important lessons you'll need to master if you want to see long-term success. I know when you first get into trading, it's easy to dream big. You've heard the stories of traders making a fortune in a short amount of time, and it's exciting. Who doesn't want to be the next big success story, right? But let's slow down for a second. It's important to remember that those success stories, as inspiring as they are, often gloss over the reality behind them. Because while there's potential for great rewards, there's also risk, and a lot of hard work behind every win. And that's why it's so crucial to set realistic goals right from the start. When I first started trading, I made the classic mistake that most beginners make: I set goals that were far too ambitious. I thought, I'm going to double my account in a month. Or I'll be a full-time trader in 6 months. Those sound great in theory, right? But the reality was very different. It led to frustration, poor decision-making, and honestly, a lot of losses. And that's what we're going to talk about today: how setting realistic, achievable goals can make the difference between a successful trading career and a string of frustrating losses. Setting realistic goals isn't just about avoiding disappointment, although that's definitely a big part of it. It's also about staying motivated, maintaining focus, and managing risk. When you set achievable goals, you give yourself a roadmap. You have a target to aim for that's within reach, which keeps you grounded and on track. And the best part? These small wins add up over time. They give you momentum and build your confidence. Trading isn't a race to make millions overnight. It's about consistent, sustainable growth. Let me give you a story to illustrate this point. It's about a trader named John. When John first started trading, he was just like many beginners, full of excitement and high expectations. He entered the market thinking he could double his trading account in a month. He was looking at the big numbers, hearing stories of traders making huge gains, and he wanted in on that. So he set a goal, a very ambitious goal, to achieve a 50% return on his account each month. Sounds like a recipe for disaster, right? Well, that's exactly what happened. John's unrealistic goals led him to take on more risk than he should have, make impulsive trades, and chase after quick wins. His losses quickly piled up. At one point, he was down a significant chunk of his capital. That's when reality hit. He was frustrated, questioning his abilities, and even considering quitting trading altogether. But instead of throwing in the towel, John took a step back and reassessed his approach. He realized that he had been chasing a fantasy. So, he reached out for guidance. He started studying more seriously, looking for a more sustainable strategy. He found that many successful traders weren't just aiming for big, fast profits, they were focused on building long-term success through disciplined, measured goals. John began by setting realistic, achievable goals. First, he acknowledged his starting point. He didn't have years of experience, and his knowledge of the markets was still growing. His first goal was to dedicate 3 months to learning, no focus on profits, just gaining experience and knowledge. This was a key turning point. Instead of focusing on what he could make, he focused on what he needed to learn. That shift in mindset helped him stay grounded and avoid the pressure of chasing quick profits. After those 3 months of study, John set a more reasonable financial goal. He aimed for a 5% return on his account over the next 6 months. It was specific, measurable, and most importantly, achievable. He broke that down into smaller milestones. Instead of thinking, I need to make 5% in 6 months, he thought, I need to make 1% each month. Breaking down long-term goals into smaller, manageable chunks made the whole process feel less overwhelming. And it helped him stay motivated when things got tough. John didn't stop there. He also made sure his goals aligned with his risk tolerance. He wasn't willing to risk more than 2% of his capital on any single trade. This decision helped him preserve his capital while still allowing for potential gains. It also kept his emotions in check. When you're risking too much, every little market move feels like life or death. But when you stick to a strategy that suits your risk tolerance, you're able to remain calm and focused, even when the market gets volatile. The key takeaway from John's story is the importance of being realistic and pragmatic about your trading goals. He went from aiming for the moon to setting achievable, incremental goals. Over the next 6 months, he not only achieved his 5% return goal but also gained invaluable experience and confidence in his trading abilities. But John's story doesn't end there. He continued to review his goals regularly. The markets change, and so should your goals. Trading isn't static, and what worked last month might not work this month. By staying flexible and adjusting his goals based on performance and market conditions, John was able to continue growing and improving. Here's where I want to hear from you. Have you ever set unrealistic goals in your trading? How did that affect your performance and your mindset? I'd love to hear your thoughts. So leave a comment down below or join the conversation on social media. Let's talk about how setting realistic goals has shaped your trading journey. Now, let's talk about some practical steps for setting your own trading goals. First, start small. If you're a beginner, your initial focus should be on learning, not on profits. The experience you gain early on will be far more valuable in the long run than any short-term gains. Second, be patient. The markets aren't going anywhere, and your success won't come overnight. Aim for steady, sustainable growth. Next, make sure your goals are specific, measurable, and achievable. And don't be afraid to break down larger goals into smaller, more manageable ones. If you aim to double your account in a year, break that down into monthly or even weekly goals. This makes it easier to track your progress and make adjustments as necessary. Also, don't forget about your risk tolerance. Set goals that align with the amount of risk you're comfortable with. If you're taking on too much risk, you'll likely find yourself in a constant state of anxiety, and that's not the mindset you want when you're trading. Lastly, review your goals regularly. The market is always changing, and so is your knowledge and experience. Be flexible and willing to adjust your goals as you learn and grow. As we wrap up today's episode, remember this: trading is a journey, not a sprint. Setting realistic, achievable goals will help you stay focused, motivated, and on track to long-term success. So, aim for progress, not perfection, and take it one step at a time.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.